Hello and welcome to the Money Marketing Podcast, and welcome to this special series of Weekend Essay podcasts. Join us as we delve into the personal narratives of our editorial team, exploring the intersection of life experiences and financial advice. From triumphs to setbacks, each episode offers a candid glimpse into the journeys that shape our perspectives on money management. Get ready to uncover the human side of finance as we share our stories, insights, and lessons learned along the way. Welcome to the Weekend Essays on the Money Marketing Podcast.
It was all going so swimmingly for the big tech stocks, wasn't it? That was until Monday, when, out of the blue, something came along that had traders trembling and artificial intelligence investors both irked and intrigued. The news that Chinese startup DeepSeek had created a generative AI chatbot similar to ChatGPT, but for a fraction of the cost, sent shockwaves through the market. Some have disputed its claim that it managed to produce it for $6 million. Indeed, as the company admitted in its own communications, the costs are only for the final training run. However, it did raise questions about whether big tech firms such as Microsoft and Meta are overspending on their own AI infrastructure. It was enough to worry Wall Street so much that the S&P 500 fell by 2% and the Nasdaq tumbled 3.5% following the announcement. NVIDIA lost an astonishing $600 billion of market value in the space of 24 hours. The biggest ever loss for a stock in a single day, while CEO Jensen Huang had 20 billion wiped off his net worth. The firm, which overtook Microsoft last year to become the world's most valuable company, saw its share price plummet 17% to boot. Other big semiconductor names caught in the crossfire include custom chip designer Broadcom and memory specialist Micron. Outside of the US, stocks that took a hit range from Taiwan Semiconductor Manufacturing Company through to ASML, the Dutch builder of chip printing machines. Over the past few years, NVIDIA and the rest of the Magnificent Seven have enjoyed a great run, providing stellar returns for investors. But many analysts have warned that for some of these companies, stocks are overvalued. There was an air of inevitability that their bubble was going to burst eventually. Perhaps my favourite analogy was from SYZ Group CIO Charles Henry Monschau, who said he'd predicted the Mag 7 would turn into the Lag 7. It's far too soon to say if that's true. What it means for AI investors in the long term isn't clear. As Money Marketing's chief reporter, Lois Vallely, mentioned in her weekend essay last week, clever investors like Warren Buffett play the waiting game. Those who weathered the storm and held their nerve through once-in-a-generation events like COVID and Brexit will attest to this. But if nothing else, these sorts of shocks and subsequent market volatility really do reinforce the need for investors to build a diverse and resilient portfolio. As many financial advisors will tell you, putting all your eggs in one basket is always a risky game. Schroders Group CIO Johanna Crickland agreed, saying, "We've discussed before the dangers that highly concentrated equity markets can pose to investors. From a portfolio standpoint," she says, "having such high unintentional exposure to just a handful of companies does not feel prudent." Kirkland's colleagues, Paddy Flood and Simon Webber, believe that if increased compute efficiency leads to reduced demand for chips, AI equipment, companies like NVIDIA and other compute infrastructure providers could suffer. They add this outcome is far from certain, but on the flip side, they say this development could actually prove favourable for some software companies. There are still a lot of uncertainties that need to be resolved. These include clarifying DeepSeek's cost structure and whether cheaper infrastructure would really lead to less spending in the global AI arms race. This uncertainty does create risk, but the severity of these moves is likely to create opportunities for active investors, particularly in technology and industrials. Even a 17% drop in NVIDIA's share price is a very small dent compared to its huge gains in recent times, and many will feel there's no need to be too concerned. Jamie Mills O'Brien, manager of Aberdeen's Global Innovation Equity Fund, shares that view. He said that, despite the initial derating of many tech stocks across the AI semi-supply chain, demand could remain robust, and he remains relatively bullish on its prospects. Another product developed in China entering the market also raises questions around cybersecurity. Since 2019, there have been fears that phone manufacturer Huawei could have used its technology to spy on Western countries. Most recently, social media platform TikTok faced threats from the US it will be banned unless it cuts ties with China over the same worries of espionage. Now we've had a few days to digest DeepSeek's announcement. It will be really interesting to discover what lies in store in the weeks and months ahead. Could it raise questions over whether America's lead on AI is shrinking? This will be especially relevant with several major tech companies scheduled to report earnings. It's difficult to say whether DeepSeek is here to stay, but one thing's for sure. The fact it's currently the most downloaded app in Apple's App Store means, in the short term at least, the noise isn't going to go away.
Thank you for joining us on this episode of our Weekend Essay series. We do hope that you enjoyed it. Please do keep up to date with all our new releases via Podbean, Apple Podcasts, Spotify, and everywhere else you get your podcasts from. You can also keep up to date with all our new content published on the Money Marketing website, as well as our print edition Money Marketing magazine, so make sure to subscribe. Follow us on Twitter, LinkedIn, Facebook, Instagram, and Threads. See you next time.